It's not going back to the 1930s. It's going back to the 19th century. Um, Tariff-based economy is something that didn't work then, didn't work in the 1930s, and I think it's very dangerous. You know, you have had other guests on who have talked about quantifying the impact, which will be very substantial if in fact these tariffs hold. And it's not just the US tariffs on our best neighbors and best trading partners, but also what they decide to do. I'll use the word to reciprocate, but this is a very difficult situation, obviously. The thing that is somewhat odd about this and different from what was seen in previous periods of history is these are tariffs being levied on our friends, and the blowback, the damage economically
Right.
can actually be extremely severe on our own economy, even without the so-called, pushback
Right.
and reciprocal nature.
To the 19th century, and folks, you've heard me talk about this, of a new Gilded Age. Maurice Obstfeld, who Abby Joseph Cohen and I worship, iconic with Rogoff and Obstfeld and Krugman in international economics, writes in the FT this morning and says it's simple. There is an inequality in America. The Gini coefficient, which is fancy math, is completely out of whack. Abby Joseph Cohen, how does Senator Grassley of Iowa or Markey of the Commonwealth of Massachusetts, how do they get us away from the Gilded Age so that we don't affect these harmful tariffs?
You have combined two very important topics, Tom. One is the inequality, which clearly is there and has worsened in recent years. We typically look at inequality based upon income, but also on wealth. And we have seen that the inequality related to wealth has actually become even more pronounced than that related to income. But what you also need to think about is how do we adjust our economy to reflect this and the power that is being wielded by those in the corporate arena, but also being assisted by the government. And you're right to say, what can the Congress do about this? And one of the things that is troubling, of course, at this point, and I'm an economic analyst, I'm a markets analyst, I'm not a political analyst, is that we don't really see the Congress getting involved in a lot of the discussions about what is happening right now. As I see it, bottom line is many of these changes, especially on tariffs, are extraordinarily painful and will be more hurtful for people at the lower end of the income and wealth spectrum.
Abby, of course, there has been ongoing debate that Trump wants to raise revenues to finance tax cuts potentially. How do you view that, and what are the repercussions with tariffs being so severe, as you mentioned, on our trading partners?
Yeah, again, I have not done the calculations myself, but looking at those people and firms that have done the calculations, there's a mismatch. The sort of revenue that would be raised from these tariffs may in fact not be all that significant, and certainly would pale in comparison with some of the tax cuts that are being discussed. So there seems to be a mismatch. The other thing to keep in mind is that when you analyze tariffs, it's a dynamic process. It's not just look at a certain percentage, in this case 25% against Mexico and Canada, and then use that number against what the imports have been. You also need to think about what will happen to those imports, what will happen to aggregate demand. And I would say that most economists would agree at this point that the sort of tariffs that are being discussed will negatively impact aggregate growth in the United States. And again, that pain will be felt most significantly by middle income and lower middle income workers in the United States.
Abby Joseph Cohen with us for an extended moment here. Abby, I was at a wonderful store, Dangerous Provisions on Madison Avenue, where they've raised the price of their egg sandwich. And next to me was a student with the blue Patagonia Columbia Business School. How are you teaching tariff economics in the market impact to the students of Columbia Business School?
Once again, Tom, a very important question. And I think that we need to keep in mind that many of the students at Columbia, and they are wonderful students, about half of the people in my class were from outside the United States. And I have to say that the discussion about tariffs puzzles them just the way it puzzles many of us here in the United States. Many of them, for example, hail from countries that are quite friendly to the United States, nations that are military allies of the United States. And to use tariffs against your friends seems a little bit odd. Now, let's keep in mind that there can be an appropriate use of tariff. For example, in cases where there's dumping, where a nation is dramatically overproducing and perhaps is selling that item in the United States or another country for below the cost of production, that might be a good reason to impose a tariff. Similarly, if you're looking to protect a particular industry for national security reasons, that might be yet another reason to impose a tariff. But these widespread, across the board tariffs on all items coming into a particular country, especially a country that's friendly to us, there doesn't really seem to be economic rationale behind it.
Abby, you're too young to remember this, but I had the clearest memory of October of 1987, and over a series of days, we enjoyed down 31%. We're down 6%, and we're pretty much hysterical. Have we forgotten what a correction is in the stock market?
Tom, yes, I do remember that day. And one of the big differences between October of that year is that that big decline had to do with internal mechanics within the stock market. I think that one of the reasons people are so concerned right now is not just the dollar amount or the percentage amount or the rise in the VIX, it's the economic uncertainty. Back in 1987, there was no economic change that had triggered that particular decline, and so it was quickly reversed. I think what people are concerned about now is that there is true uncertainty with regard to economic policy, and there doesn't really seem to be a clear rationale, economic rationale, behind the numbers that have been thrown out vis-a-vis a 25% increase in tariff. In addition, we're facing uncertainty with regard to whether the continuing resolution that has kept the federal government working, it will expire March 14th. We do not yet have a new budget in place. So that's another area of uncertainty. One of the things, however, that I'm looking at very closely are not some of these things right on the news flow, but rather the long-term issues. And something that I don't think is getting enough attention is that decisions made by the Trump administration are damaging the long-term status of the United States as a scientific and technological leader. We're basically cutting off at the knees a lot of the work that's being done by leading scientists in the U.S. government and also in U.S. universities.
I look, Abby, where we are. I got to be quick here because just Menton wants to get in. We're going to have headlines out of Mexico here. President Sheinbaum is speaking right now and announcing, quote, countermeasures on a Sunday. How do you be comfortable long-term investment, Abby, owning securities here? I don't want you to, redo what David Costin's working with this morning at your Goldman Sachs, always your Goldman Sachs. But just in general, how do we have comfort with equities as a long-term opportunity?
Right now, I think we need to kind of sit back and see which way policy is moving. And then, of course, we can apply the models. As you well know, the long-term benefit of investing in the United States has been related to the strength of our economy, including the long-term investment that is made by companies in CapEx, also the investment that's made in information, whether that's education at the K through 12 level or at the university level, but also, as I mentioned before, our willingness as a nation to invest in the future by funding places like NIH and the National Science Foundation and NOAA and CDC. And I think that many investors ought to be paying attention to whether the Trump administration will reduce those cutbacks, and in fact, I hope reverse them because they make no economic sense.
What else potentially could be coming from the White House when it comes to trade policy? Because you were mentioning that March 14th deadline for the government to avert a shutdown, but then on March 12th, just next week as well, 25% tariffs on all steel and aluminum imports are also set to come.
Yeah. Now, one thing that I don't know, again, I'm an economic analyst, a markets analyst, not a political analyst, is I don't know what the game theory is behind this. There are some people who are postulating that the 25% numbers that were picked out for tariffs were designed basically to be an opening bid, if you will, for negotiations with various countries. So where we end up, I don't know, but I think to kind of throw the gauntlet down in front of nations that have been cooperative with us over the years, that have their own economies intertwined with ours. You know, this is not a mercantilist economy. We are highly dependent upon these interrelationships that we have, and many of these tariffs will damage us very significantly.
Abby, the time we got left, I got to interrupt you. I mean, you're working a hard 15-hour week up at Columbia Business School. Let's be honest, Abby Joseph Cohen, you could slide right over to be vice chairman of the Fed, or dare I say, chairman of the Fed in a heartbeat, given the moment, the politics of the nation. How should Jerome Powell respond to this moment?
I think Mr. Powell and the other members of the FOMC need to be doing what they have been doing, and that is to focus on the data and to keep in mind the dual mandate of inflation, but also employment. And one of the things that has been terrific throughout the Biden administration has been this ongoing creation of jobs and then the increase in the average wage adjusted for inflation for the American family. They will be watching at the Fed whether that good news continues. If we see an erosion in the labor markets, if we see an erosion in wages adjusted for inflation, I think at that point they're going to need to adjust the policy and provide some stimulus to basically offset some of these policy decisions coming out of the White House.